Okay. Funding. Awesome. All right. Hello, everyone. Happy Friday. Yes, it's Friday. If you're joining us, be it from Facebook, YouTube, LinkedIn, hello. I'm so excited to be on here. You can tell, right? If I told you guys I've had about 9 meetings since morning, you probably not believe it. But you see how excited I am? Because I'm getting to chat with you guys. Hold on. I need to minimize something on my screen. I keep seeing something on my screen. Good. So again, it's an honor to be doing this. As I shared yesterday, that we started something new, which is like a little conference we'll be doing every month. It's going to run for 3 days each, and the theme for the concept is called Tax Strategies Conversations with me, Dr. Lily Binglow. And this month's theme is setting up for success. And it's my hope that I can share enough information to really help you guys make guided decisions and really informed and guided decisions, and hopefully build successful and sustainable organizations. Yesterday, you guys remember what we talked about? For those who watched yesterday we were talking about choosing the right business entity and how that impacts your taxes, right? And so today we're going to be talking about funding. We're going to be talking about the different ways you can fund your business and how that also affects you tax wise, because a lot of times, whether you're seeking funding or you're investing in a business providing funding, you never know how it's going to be treated for tax purposes. So I thought I'd really explain that today. So we're going to be going over, different ways you can fund your business and what are the deductions that you can take out of those when you're writing off. The deductions you can get when you're writing off your taxes, and hopefully, some ideas on how to seek additional ways or creative ways to get funding, and lastly, how to prepare yourself to attract funding. When you're going to seek funding. Okay, I hope this is really going to help someone. If you do not know me, I am Dr. Lily Binglow, a very, very licensed, happy, dance, loving CPA. And yes, it's very important that I point out that I'm licensed, because there are CPAs who are not licensed, and that is not good for you as a business owner. You never want to work with a CPA who is not licensed, because being licensed means every year we have to keep up with what's going on in the business world and with taxes and other areas that we focus on. And so when you work with someone who is not licensed, there's a high chance they're not keeping up to date with their information. Let's not even talk about the ones that are calling themselves CPAs that are not CPAs. Like, let me leave them for today. Today is not my battle. I'll just leave that one, okay? So it's important that when you're dealing with a CPA, it should be someone that is licensed. And I am the founder of the ARC NPS. We are a full service CPA firm. So we provide everything from accounting, bookkeeping, payroll, tax services, advisory services, as well as startup services for businesses, for nonprofits, and individuals. So, guys, in addition to that, I am a professor at Regent University. I teach accounting to the MBA program, and we will be teaching more accounting courses to the Masters of Accounting program. I'm excited to be preparing more CPAs down the road, because I need you guys to have more people like me supporting you. See how cool that is? Yes, community mindset. Above all the things that I do, I love to impact and inspire our community. Okay, I enjoy sharing what I know. It keeps me up at night when I know that there are people that could be doing better, or people are making mistakes, because no one has empowered them with the right information. There's a lot of wrong information out there, and if people like me who know what is right, if we're not speaking up, if we're not providing the guidance, if we're not helping our community, then we can't sit and be mad, right? And so for that reason, I've taken it upon myself, and it's also very tied to my purpose, to make sure that I share as much as I can, so that all the entrepreneurs, the business owners, the nonprofit founders in our community have what they need as they build, have what they need as they make decisions that impact the lives of other people that they serve as well, and hopefully help them with generating more income, saving expenses, and saving on taxes. Okay, I think that's a win-win. All right. So today, guess what we're talking about? Funding. I already gave you guys a little heads up. So let us dive in, you guys. Let's dive in. So what is funding? What is funding for a business owner? Just money that you need for your business, okay? But why do business owners need funding? Okay, money makes the world go round, it makes your business go around, it keeps your doors open. Well, first thing is you need money to start a business. You cannot start a business by wishing. You cannot start a business by being nice. Neither can you do it by being cute. Nobody is going to help you because you're cute. Maybe they can give you a little hand out, but that's all. So you need money first because you need to set up a business. So in order to start a business, it requires some kind of funding, whether it's with registering the business, whether it's with getting supplies that you need. You do need some kind of funding. Poor, I see you. Oh, my favorite person is on here. Pooh, I see you. That's my baby brother right there, showing me some love. Thank you, Pooh, for staying up so that you can come keep me company. Okay, Leo Fournier. Okay, so the second one, you need capital because you need to expand and to grow. You know, it's one thing when you start a business, but it's a different thing when you need to scale the business. And for the most part, you know, you might need additional funding from external sources in order to take it to the next level. If you're producing something good and there's a bigger demand, you might need to be able to fund that to upscale to that, to deliver on it. And so you would likely need additional funding for that. People need funding sometimes because they need to get capital. They have to get capital investments, like capital equipment. Sorry, I said investments. Gosh, look, I'm talking money and now my head is just spinning money. But capital equipment, right? Sometimes there are businesses that require you to have a certain type of machinery, which is heavy. Not many people have, that kind of money in their pocket. So you might need to seek funding for that. People seek funding for payroll. When you start a business, especially if it's a business that is heavy on the people side, you might need some help with at least covering your payroll, right? If there are people who are watching this who are in the healthcare space, home healthcare especially, before you start getting paid by Medicare and all these other insurance companies, you have to keep your staff, you have to cover your staff. So if someone is in a space like that, they might need funding to cover that. And then you also need funding for cash flow, right? Just to tell you that if you're in a business, no matter what level you're in, for the most part you will need money until your business is in a good place where it sustains itself and does not need any external funding. All right. So that's kind of the preliminary here. We're just laying some foundation because every business needs money. And just to give you an idea, that if you're an entrepreneur and you feel like you're running out of money at some point, you're not alone. Even big businesses need money for different stages, maybe for innovation, maybe for technology and all of that. Okay. So what are the different ways that you get to fund your business? Now, there are 5 major ways that you get to fund your business. The first one is usually by your own money, right? And remember, I said today I'm going to be talking about how to fund your business and also how the tax implication, whether it's going to cause you to have a tax bill or if it's not taxable at all. All right. And that's what I want to explain from this. So the first way to fund your business is generally from your own money. That happens when you start in a business from a small scale. That's the typical entrepreneur. You start with your money, you spend, you get your business registered and all of that. Okay. So that's they call it bootstrapping because everyone can start a business using their own money. It's easy to begin with, especially if you have money saved up. There is limited risk in terms of you having to depend on people to give you money. If you already have the money, you don't have to give away any ownership of your business, and so you own your business completely. When you are setting it up by yourself, spending your own money, you're not splitting out any ownership, right? That's great. The only problem with that is you run the risk of, if the business doesn't work, you've lost everything, right? Everyone always tells you consider using other people's money when you're starting a business or when you're building a business. And the reason for that is because it allows you to spread risk. But when you're using your own money, that can be a challenge because if you lose the business, you lose everything. It makes it a lot harder for you to get back into business. Okay, so that's usually one of the easy ways that people fund their businesses. Now I want to talk about how this gets treated in taxes, because I've always heard people who come to me and say, can I write off this money I invested in a business? It's your business. Unfortunately, you cannot. Okay, there's a certain business where I think you guys are made to like put a certain money amount of down and buy like you buy like, so I don't know if it's water filter, I've forgotten what business that is. Now there are certain expenses that you can write off, the expenses incurred in you wanting to run that business and all of that. But the money that you invested into your business, your own money, right? That you invested into your business is not taxable income to your business at all. But you cannot just write that off because you made an investment. No, especially if you use that to buy something that you're going to be using for a period of time, you have to depreciate it over a period of time. All right. So money that comes from your pocket is not taxable income, of course, right? Because you're using after tax money. But I want you to keep in mind that depending on what you do with that money, you could be able to get some amount of tax write-offs if the deductions can be written off in that time period. If not, you might also need to depreciate it over time. Now, I want to point out something very important for people that start a business and they fund it by themselves. When you start spending money on your business, until you make a sale, the IRS considers you to be in startup mode. When you're in startup mode, it means you can only write off up to $5,000 in business expense, which is what you spent. If you spent more than that, let's say $50,000, and you haven't made a sale, unfortunately, you would have to amortize that over a long period of time. So you're going to take the time to write it off bit by bit by bit. So just something to think about when you're putting your own money in your own business, just knowing that you're not necessarily going to get the tax benefit, all of it at once, but can you write off some of your acceptable deductions, those that are ordinary and necessary? Absolutely. Okay. So that's like the low hanging fruit. Most people start business, they use their own money. So it doesn't, it's not a big burden to anyone, except themselves if they lose everything and if they didn't really take the time to plan it. All right. The second type of funding that most people get when they are in business is business loans, right? Business loans are usually loans you can get from a bank, from a financial institution. You can have an agency that focuses on funding. Sometimes you have investors that put together, create an organization, and all they do is give loans to small businesses to get themselves started. Business loans they have their own advantages. One of them is if you're in business or you have a great idea that you want to pursue, but you don't have money, having access to that kind of money is such a blessing, right? Because then your business doesn't have to go out of, you don't have to go out of business because you don't have money. Now, when you get a loan from the bank, you do have to pay it back. I have to point out one thing. Because you're getting a loan from the bank, that is not income to your business. We've had situations where people have incorrectly reported income that they got from the bank, loans from the bank, as income or as revenue. And that might trigger a taxable activity, which shouldn't be. Okay. So, and what I mean by that is if it shows that you took a loan of 50,000 and you went to someone who erroneously recorded that as revenue of 50,000, when you deduct your expenses, you might be showing that you made a profit of 20,000 and now you're owing taxes on $20,000 that you shouldn't have because that was a loan. So when you take a loan from the bank, it's what we call a balance sheet. We're not going into accounting right now, but that's a balance sheet transaction. It hits your bank account, you have cash, and then you have a loan, a liability. None of that impacts your profit and loss statement. So you should not pay taxes on it. Now, one thing that is great about loans when you pay it is you pay with interest, not great if it's a very high interest rate. But the item I'm trying to say is when you pay back loans, you pay with interest. That interest that you pay on a loan is taxed. Is a tax deduction. Okay, so keep that in mind. When you're paying back a loan with interest, the interest is deductible. Why is this important? Sometimes there are business owners who take a loan and they think that when they're paying back the loan, the entire amount that they are paying plus the interest is deductible. No, it's not. Only the interest is deductible. That's why when you guys get your 1098 from your mortgage company, what does it say? It says mortgage interest. It doesn't say mortgage payments. It says mortgage interest because, hey, Irene is here, because you only get, oh my God, that's my classmate from St. Beats. Thank you, for being here. You only get a write-off for the interest for the loan because the interest of the loan is the cost of borrowing money. Okay, so when you borrow money, that interest you're paying is the cost, all right, because it's the risk that the bank has, taken to give you their money. And now, because for that risk that they have taken, you pay them with interest as you pay them back their money. So that interest is deductible. Okay, but the revenue, the not the revenue, the loan that you get is not revenue, so it's not taxable income to you. It's a balance sheet event. All right. The third kind of way that people fund their businesses is by getting fund. It's by getting money from investors. Now, let me say one thing about the bank. When you get a loan from the bank, I forgot to say, you keep all the ownership of your business because the bank is loaning you money. And so, if you're someone who likes control, like my business, my business, my business, a loan is good because nobody is going to touch your business. You're going to pay your loan. The day you don't pay, they'll take the business, take your house, take everything. But it's all yours. All right. At least we got that clear. We got that clear. Now, the third way of funding your business is by getting investors. And the thing now is, this is where you would have to lose some control. Let's talk about it. So when you seek out investors to come and invest in your business, all right, and they come and they, put some money in, one of the ways that you compensate them, or the exchange that they get, is ownership interest. All right. So when someone says, okay, I'm going to invest in your business, well, I want to be an owner. I want to be a part owner of that business. So for someone who is trying to seek funding from investors right now, pay attention to this. Okay. So when people invest, be it angel investors, a VC, whoever is investing in you, you will generally have to exchange some ownership of your company. Now, for people who do not like to give away control, that can be a tough thing for them. But for someone who is like, look, I'm not trying to be greedy. If I can get enough money to build an empire and many people can eat, I'm fine. This would probably be good for you. Now, the funds that investors give to you, it's also not treated as revenue. Very good that you pay attention. It's also a balance sheet transaction. So when they give you investment funding, it doesn't hit your profit and loss statement. It only stays in your balance sheet. So if someone has reported that incorrectly before, it's not right. It stays in your balance sheet. You get cash from the investors, and then you trade equity. You split your equity, right? Now, this is where this gets tricky. If down the road you decide to sell some of the shares of your company, you're going to trigger a taxable event. All right. So just keep that in mind. For someone who is listening to me and you're probably thinking, so which one is better? Is it better to have a loan and keep your ownership, or is it better to seek funding from an investor and split ownership? I would just say it comes down to personal preferences. But if I had one advice to give to every business owner, this would be my advice. Use debt to fund short-term expenses. Use investment funds to fund long-term growth and expenditure. This is why. Let me explain. When you get a loan, when you take debt from a bank, you pay back with interest, and it can be extremely expensive when that interest keeps piling up. Okay. So if it's to take care of short-term things, like maybe you want to catch up on payroll, maybe you want to pay your rents for a short period of time, taking a debt or loan from the bank is a good way to go. All right. But when it becomes a long-term thing, let's say you were trying to make a growth, you have like a 4 or 5 year plan where you want to build something. For you to keep paying interest on the loan, that can take away from your profits. So the best thing now is where you bring in investors. Why? Because investors are part owners. They're gonna be patient. If we're not making a profit, you can't come and kill me. But if you have a loan, you're likely gonna need to make a payment, because if you don't make a payment, the bank is coming to take everything you own. Okay, well, not everything you own, but whatever collateral you put on there. So just something to think about for someone who is listening to me right now. Okay, the next thing now, we're going to talk about how to prepare for this funding. The next way people fund their business is by crowdfunding. All right, you guys see it all the time. You have what are the different ones? You have I hate to use GoFundMe, but people do use GoFundMe to fund businesses. So, we've just associated GoFundMe to be a scam thing. No, I'm joking. I need to take it. I wish I could take it back. It's not like a scam. It's just people. I think sometimes they get abused, because you have good people and sometimes their kindness get abused. But I'm not here being judgmental. I'm just saying I started laughing because I use GoFundMe as an example. Let me get out of that. Kickstarter, for example. All right, you have Kickstarter. That's a good example. So the thing with crowdfunding that is great is it's a way to maybe legitimize or maybe to evaluate your business idea, right? You take it out there, you put it into the hands of strangers, and you're like, look, if you believe in this thing, support my vision. I feel like that is so great, especially with the way the world is going. But now I need to explain something, okay? If you set up your Kickstarter, for example, yeah, you have Kickstarter, you have what are some of those ones that they have there? There's Indigo. I remember I've done an Indigo for someone before a long time ago. There's another one that is popular, but it doesn't matter. A client did one the other day, I've forgotten. But anyways, so let's say you decide to do crowdfunding. All right. So crowdfunding is one of those things. You go, you put on your idea. If people like it, they'll support. Two things are going to happen, and I want you to pay attention to this for how it's going to impact you tax wise. If you did your Kickstarter or your crowdfunding, and in your crowdfunding, you promised to make an exchange. So if someone gave you, let's say, $200, they got a t-shirt. You see that fund? Unfortunately, that's taxable income. It's taxable. But if you did your crowdfunding and people said, we like your idea, we want to support you, that's gift. It's not taxable. Isn't that interesting? So if people, it's just like if you were starting a business and a family member gave you a gift, that's not a taxable. I mean, depending on the amount. But if they gave you like $1,000, like take, right? That's not revenue to you. But if you did the Kickstarter and there was an exchange of something, or if you promised them equity as well, then now that's investment income. You see how that is? So I want you to pay attention to that, okay? But if you did exchange of goods, like if they gave you money and they got like t-shirts, they got like that, yes, so that becomes taxable income. So just keep that in mind when you are seeking funding through crowdfunding. If you want it to be a gift to you, or if you want it to be considered a taxable income, if you're going to offer them stuff, or if you want it to be in investment income, and then in that case, kind of just as I already explained, it hits only your balance sheet. Things to think about, okay? But you do write off deductions that are incurred in any fees that you had to, any fees you incurred to set that up. You're able to write that off, okay? So I hope that helps. The next way people fund their businesses is through grants. Yes. And with recent years, there have been a lot of grants allocated for small businesses, especially with minority businesses. And I think it's been great. It's been a lot of grants that are given for people that are going into innovative spaces. If you're someone who has been positioning yourself to get some of these grants, I think it's great. I think every business owner should definitely consider, if there's a grant that you can apply for, to consider it. I used to teach at V-Week, and with V-Week, what will happen with the participants that were business owners is when you complete a certain portion of the program, they will give you a grant, and that grant you take and you would go spend it on your business, which I think was cool. Now, unfortunately, grant income is taxable income. Yes. If you get a grant, it's taxable income. You will report it as other income. Yes, it did not come as a result of you selling anything, but it is taxable income. When is it not taxable income? If it was given for a tax exempt purpose, or if it was given for something that you're getting a credit for, like research and development. Okay, just keep that in mind. So generally, if you got grant income, you would have to factor that in. All right. So did I go through my list? See, that's what happens. I get excited. I don't look at my notes. So I said you can fund your business by yourself. You can fund it by getting a loan. You can fund it by getting investors. You can do crowdfunding. And then, of course, you can do grants. Yes, those are my top five. Okay, so now let me go now to my notes, because I want to talk about a couple of things. So now let's talk about some of the tax deductions that come with these. All right. So you've already understood that anytime you're getting a loan, loans are not taxable, but the interest you pay on the loans is what's is deductible, which is great. The same way, if you had to incur any money or you had to pay any lawyers to get any loans, that is also a deductible expense. If you got equity from people, if you got investment income from investors, it's not taxable. But if you had to maybe spend money to bring those investors together in order to do the fundraising, you'll be able to deduct expenses as those, because those are business deductions. Okay. Now, down the road, if you end up selling stocks, that's past that initial issuance of stocks, because issuing stocks is very different when you're issuing stocks to raise funding versus later on when you're selling stocks. And again, they're a little bit, few more complexities to that. All right. But just something to think about. Now, why is this important for you as a business owner? It's because you don't want to go seeking funding without realizing that there could be a tax implication to this. Okay. So, for someone who is thinking about getting a grant, for example, I've had situations where people did not put aside money for taxes and then they get hit with a tax bill and it throws them off. Sometimes you have a situation like in the crowdfunding one. If you do crowdfunding, please put aside like 20 to 30% of some of that income for taxes, because if you get hit with a tax bill, it's never a lot of fun. All right. So now let's talk about how you can prepare yourself to secure funding from these different options. All right. At least I think I've done justice to this. Try not to give you guys too much, but let's start now. When you are thinking about going to a bank, guys, if it's one thing I preach more than anything. In fact, if there's one advice I will give anybody as tax advice, business advice, is to always have accurate records. You see, accurate records, that's the best thing you can do for your business. Maintaining accurate records. Because every time you have accurate records, people can trust you. You can clearly present what your business journey has been like. You can take that to a bank and someone can look at it and they can understand the history of your business. So when you're thinking about seeking funding from a bank, the first thing I want you to consider is your records. How accurate and timely are your records? If you're a business person who has not been investing in having accurate financial records, this is the time for you to consider. I see so many business owners, they'll come to me, oh, we want to go ask for funding from this and that. And you're like, okay, why your financial statements? Oh, we don't have it. Okay, when you filed your taxes, how did you file your taxes? They played mumbo jumbo on their taxes, right? Those things don't work like that. So if you're a business person watching this, if your goal is to eventually go to the bank to ask them for a loan for your business, especially for expansion, I'm not big on taking a loan to start a business, especially if you're still trying out your idea. Use your own money that you save, because if you can't use your own money that you save, how am I going to trust that you actually believe your idea, right? I don't want you to take a loan when you're still testing out an idea, because what if it doesn't work? But once you've been doing this and it looks like it's promising, it's successful, and you can sustain it, then you can go to the bank for growth. So my personal advice will always be, give yourself 2 years before you go to the bank. Within 2 years, make sure one thing, your registration documents are solid. Okay, you want to be up to date with your state documentation, because when you go to the bank, the first thing they're going to check, they're going to go to the Secretary of State, cha 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 cha, pull up your business, inactive, we can't give you money. You want to make sure. Second thing, if there's anybody that used to be a part of your board, or someone that registered your business with you and they're no longer part of your business, make sure you file updates with the Secretary of State. Then the third one, which is the most important one, is those accurate records. Make sure that your records have been maintained, but not only that, make sure that you've been filing your taxes and it aligns with your business records. You know what people do sometimes? They will have records that they try to put together for funding, but here's the problem: when they filed their taxes, they made up numbers. If you are a business person who wants to build well and who wants to build doing it the right way, avoid those shortcuts. I know people are always like, I'm looking for a cheaper person. I'm looking for the tax person that's going to give me the biggest refund. When you're a business person, you get out of the mindset of refunds. That's good for people that have jobs. When you have a job, you pay taxes, you can get a refund if you pay too much taxes. If you're a business owner, you do not pay any taxes to Uncle Sam, why are you looking for a refund? That's why you guys keep getting in trouble, because somebody now has to lie that you pay taxes for Uncle Sam or for you to qualify for a credit, and you should get a refund back that you shouldn't even be getting. So as a business owner, if you're a full-time business owner, you should just get out of that mindset. Unless you have a job, then at least you can qualify for a refund if you have enough deductions. So make sure that your book, your accounting records, they tie with what you have filed. All right. And then the big part now is you have projections. All right. So the first thing was make sure that your registration is up to date. Second thing is make sure that if there are any changes in your company, that you're filed with the state. Third is make sure that your books are accurate and your taxes and your books align. Fourth thing is create a projection. The projection, now remember, when I talked about your books and taxes, that is historical data. When you do a projection now, you're projecting into the future. Your projection now is the opportunity to tell the bank what my goals are for the next 5 years, what the money that you're going to give, what is going to do for the business, and also how quickly you're going to repay the bank with interest. You see? So if you have this one, this is usually the one that nails it. You hardly find a bank that is not willing to at least consider you for some loans. And even if they don't, you can even go to an individual and likely get money because they can see that you've tracked your records, you're an honest person, your business is very promising, and if they invested in your business, there's a high chance they'll be able to get a return on investment. All right. So if you keep that in mind, guys, I can promise you, you stand a higher chance compared to probably 90% of business owners to get funding, small business owners. Now, when you're going to seek investors, this is the second part now. When you're going to seek investors, it's slightly different from the bank. Okay. Remember, the bank, you're borrowing money to pay back. Investors are people that are investing because they want to have some ownership and hope to be getting a return on their investment. All right. So one of the things you would need to do when you're going to investors is make sure that you have kind of some of these. A lot of them will not be looking at your personal taxes per se. But of course, business maybe your records, but they want to see the research. Okay. They want to see research that is backing you. They want to see how well your product has been doing and how the market is responding to your product. They want you to have a very solid elevator pitch. And then the goal for them at the end of the day is, are we going to stay profitable for a long time? Because we want to make sure that we'll be getting our money's worth. Okay. Make sure that you create a business plan that captures these, that shows how you're taking over the marketplace, your market share, how much your product is desired in the market, and be able to show them where their money will go. One thing I will tell you, please avoid it because I've seen so many people fail here. Don't exaggerate. Don't go and lie to these investors. The people that really have money, if they have been investing in multiple businesses, I can tell you one thing, they are very aware of what they are doing. So you don't want to waste energy trying to paint this very optimistic picture. No. Be very honest about some of the challenges that your industry could face. Talk about ways you could try to attack those, to deal with those challenges, but don't try to be too optimistic or to lie. That's where a lot of people get in trouble. Okay, so once you have all your records and you have some really good projections that are backed with research and analysis, and you can show them that this is the direction of the company, you do stand a really high chance. Of course, everybody wants to know your product has been tested and tried. Nobody's investing now in companies that have not had products tested and tried. Some people still invest in ideas if you're lucky enough, but you're better off when you've been in your business for a minute. That's why I always say, try to make sure that you put in some work, show people what your historical data is, show them how you started and what you've been able to do with what you invested, and now how their own funding can take it to the whole next level. All right. If you do this, guys, I can promise you as a business owner, you can go to so many conferences and people will tell you, come on, let's talk about funding. If your books are not in order, please don't waste your time. If you do not have accurate records people can rely, please don't waste your time. If you do not have historical data that can show how your business has progressed over time, it's going to be hard. All right. So those are two options I have for you. And I wanted to close with one last thing. There are other creative ways that you can fund your business, guys. I know, first of all, it's so many people seeking funding. I mean, think of banks, how many applications they get for funding. So to stand out is hard. And then talk of investors, everybody is coming after their money. So just that alone tells you that there are sharks everywhere, right? And so you have to be mindful of the fact that because you want money, because you have all these ducks in order, does not guarantee that you're going to get money. So there are other creative ways you can consider funding your business. One of them is to consider partnering with other businesses, and partnering in the sense that you can share resources. So if a business has a building somewhere, instead of you wanting to go rent a full building, maybe do a partnership with them where you can use some of their resources at certain times of the day. I always encourage that. I think that is an incredible way to spread your to save, right? When you partner with others to leverage their resources, and whatever you can offer to them, you can do that. You can barter as well. There are a lot of barter organizations. I'm part of one. Well, am I? I don't even know if I'm still part of it because there's no time to even check what is going on. But with barter organizations, you get to trade services. And it's so nice because they have it very organized where, you can go there and have someone, let's say you need accounting services and there's an accounting business in the barter's network. They will provide accounting for you. You don't have to pay them with cash. you can use barter dollars for that. And then barter dollars you can get when you also provide your own service to someone in the network and they can pay you with that. It's an amazing way to also save. The third way you can do it is another thing is what we call factoring. Factoring is where if you have an accounts receivable account, like you have accounts receivable is for businesses where you've provided a service to someone or given them goods and they haven't paid you back, and so they're still owing you. These are for businesses that do accrual accounting. What you would do is you can go to someone who can front you a portion of the money for a fee, and then they will go after the person that is owing you that money. So that way you at least have cash flow to continue running your business and not feeling like, your days are coming to an end. So just different ways for you to keep your business going, you guys. I know business ownership is not easy. Talk less of getting funding. Every business owner is going to tell you funding is our issue, but I'll tell you, having accurate records is your lifesaver. All right. If you can maintain your records, if you can track your stuff, not only will it help you to secure funding, that's just one. But you know what? It would also help you know where your money is going to. It will help you understand where your money is coming from. It will help you know which markets are bringing you the biggest return on investment. When you advertise on Facebook, when you advertise in your local neighborhood, where am I getting the most return on investment? When you track your records, those numbers don't lie, and I can tell you it will help you become a better business person. You become someone that people can trust, and you will likely attract and secure more funding for you than any other businesses can. All right. Well, you guys, I think I kind of went a bit over. Whew, I love this. Oh my God. You see, look at me. I have notes that I never remember to touch my notes because this is so good. I get excited. But I hope I covered everything. I did talk about the funding and how it impacts you tax wise, which is good. Is there anything I'm missing over here? I think my main thing was just make sure that you balance loan and equity. Yeah, debt and equity. All right, good. Any questions for me so far, you guys? Please empty my brain. I don't play when I say empty my brain because this is a lot of information that most people will not sit and walk you through. I want to be here for you. I want to be able to provide that guidance. If you're someone who is yet to do their taxes or has questions, you don't even have to be our client. I do offer free 15 minute sessions that you can click on, and I'm happy to answer your questions. Hey, Cyril, I see you. Bandy, you came late. And you're driving. I'm just joking. So so good that you could join. You can always watch anytime. But these are very crucial things for us to know when it comes to funding. And if you need any guidance, like I was saying earlier, click on my calendar. If you need me to explain something more, if you have been in a bind, if you've found yourself somewhere where you're seeking a loan and you feel like there's information that they require you don't understand, I'm always happy to answer your questions. You can book a free consult with me, 15 minute consult. You can just scan it on the screen. Guys, look, I want to see all of us winning. You understand? If anyone knows me, the passion I have for the business world, well, for people in general, you you will know that I should be one person you need to know. You understand? Because I love this, and I genuinely want to see all of us winning. I want to be that resource for our community. I want to make sure that if there's something I can guide you with, let me do it. Yes, I will never have enough time to talk to everybody, but if you can at least schedule your 15 minutes, you can take advantage of that. All right. For those that have not yet done their taxes, if you don't have a solid tax firm, we would love to be your tax firm. One great thing about us when we do taxes is, you will never have us file your taxes without reviewing with you. And when we review, we can always guide you on things that you should think about, things that are missing, things that you should plan on next year. For those that are S corps, those that are in partnerships, we love to serve you guys because your taxes are not only complex, but there are so many amazing tax strategies for you, which if you're not going to a CPA or someone who understands the ins and out of S corps and partnerships, you'll be missing out. And when we file your taxes, you get a complimentary 1 hour tax planning. Look, you see me, I'm sitting here. I just give a little bit. If you sit with me in a tax planning session, you're gonna come out and say you're now Professor somebody. You understand? You'll be loaded. So if you want a full hour of consult, you can also book that. During these tax strategy sessions, I really walk you through all the stuff you can do within your entity and empower you to leverage the tax code for your business success, save on taxes, and build very sustainable and successful businesses. Okay. So if you don't yet have a CPA on your side, you better be hopping on my calendar. The ARC would love to serve. For those who have not gotten their planners, I hope you get it. I put my heart and soul on the planner, guys. I have to talk a little bit more about this because this planner is everything. For any business owner, you know how it is. Like every year, I'm putting different tax tips and we're adding even more schedules to give you something that you can have handy as a business owner to guide your decisions, to help you plan and just make the most of your life as an entrepreneur. All right. So I think I'm gonna call it quits. It's Friday. I should let you people go and chop life. Any questions for me, guys? Any questions? Any comments? And I hope I there's nothing that I'm missing. If there's any, I would answer. If there's none, if you come and watch this later on and you put your question in the chat, I will make sure I respond. Okay, guys. So this is day 2. We've come to an end, and we have tomorrow, day 3, and that's the final day. And tomorrow we'll be talking about tax strategies every business owner should know as you grow. Okay, that one is my favorite because you guys are sitting on money. You're sitting on money. In fact, you're sitting on money that you're giving to Uncle Sam that you should be putting back in your pocket. Why? Because Uncle Sam has given you the opportunity to be able to save by making sure that you deduct every expense that you spent or you incurred in order to make money for your business. But because sometimes we don't know, we leave all of these things on the table. So I'm going to be pulling your ears tomorrow and reminding you of what these are so you can take advantage of them. If you already filed your taxes, that's okay. In fact, it's actually okay because you didn't know that you could have done that in 2024, but it's good that we can talk about it so you can apply the strategies going forward. Okay, so just make sure that you're on tomorrow at 4 p.m. I know it's Saturday, you probably be eating barbecue somewhere, but it's okay. Just bring out your phone, join me if you can, and if you cannot, make sure you watch the recording. All right, so let's see. I think we should be good over here. Just want to make sure I didn't miss anything. Let me go to my phone. It's kind of nice when you're streaming from your laptop. You guys, you see what our team did? It's so neat, right? It's like so cool. Everything is passing at the bottom. All right, I know I'm a nerd. Thank you guys so much. Have an amazing evening. I wanted to say weekend, but I'll be back tomorrow. So stay tuned. Save the date, save the time, put an alarm for 4 p.m. Eastern time. All right. For those who are on Central time, it's going to be 3 p.m. for you. For those who are on California time, I think it's Pacific, it's going to be 1 p.m. for you. All right. Let's not miss each other tomorrow. You all be safe. Thank you so, so much. Bye.